Banks want you to believe your money is safe. They want you to think your money is growing. But the reality is very different. Your savings account has slowly become a trap. From 1913 until today, the United States dollar has lost 96% of its value. Think about that. The cash sitting in your bank or at home is silently losing its purchasing power. Governments keep printing more paper money to cover their huge deficits. The paper sitting in your wallet is not real wealth. It is a depreciating liability. Inflation is rising fast, interest rates are falling behind, and keeping your life savings only in cash is the easiest way to slowly lose everything. So let's understand what the first asset is. Asset number one: gold, silver, and platinum. But what if you could escape this broken system? Let's talk about gold, silver, and platinum. For thousands of years, these precious metals have survived every collapsing currency. No desperate government can print them. Their supply is limited, and that scarcity is your biggest protection. In the 1950s, 1 ounce of gold cost around $400. Today, that same gold has crossed over $2,000. And according to projections, it could reach $10,000 in the next 10 years. When paper money burns, gold becomes even stronger. And it's not just gold. Silver is an industrial powerhouse. Electronics, medical equipment, nuclear reactors, it is used everywhere. Platinum and palladium are also extremely rare metals with very high demand. When inflation goes out of control, these metals provide unmatched stability. Today, you do not even need to store physical gold bars. You can invest through gold IRA or ETFs. This gives you the security of real metal without the tension of storage. These metals do not pay dividends, but they guarantee one thing: your purchasing power survives. So let's understand the second asset, asset number two: stocks and Bitcoin. But survival alone is not enough. You want your wealth to multiply, and that brings us to the next asset class: value stocks and Bitcoin. First, let's understand stocks. Not every stock is the same. Growth stocks are based on risky ideas and future technologies, but value stocks are connected to real-world demand. Companies related to industrial metals or raw materials usually provide stable growth and reliable dividends. If the American dollar starts weakening, smart money shifts into foreign stocks. Holding international mutual funds can help your wealth grow when foreign currencies perform better than the dollar. This becomes a powerful shield through global diversification. Now let's talk about the modern digital frontier, Bitcoin. During times of economic uncertainty, a lot of capital moves outside the traditional banking system. Cryptocurrencies are completely independent from central banks. They create an alternative financial system. If the US dollar becomes weaker in the future, decentralized digital assets could become a major escape route. But remember one important warning. Even investors like Warren Buffett say Bitcoin is highly volatile. Prices move very aggressively. So never invest money that you cannot afford to lose. But Bitcoin's independence makes it a powerful hedge against a failing fiat currency system. Asset 3: land and real estate. But there is one asset class that has created the largest generational empires in the world. Land and real estate accountants consider land a non-depreciating asset. Why? Because more land cannot be created. The population keeps growing, and the demand for housing, commercial spaces, and agricultural land is moving in only one direction. Up. History proves this too. From 1992 to the 2020s, housing prices have almost tripled. Real estate absorbs the shock of inflation and continues holding its value even after economic crashes. When the purchasing power of the dollar falls hard, property stands strong. And you do not even need millions to start. REITs, or real estate investment trusts, work like mutual funds but for properties. You can own a small part of senior housing research facilities or commercial real estate with very little starting capital. If you want direct control, you can buy rental properties. The tenant pays, your mortgage covers expenses, and also generates steady cash flow. Yes, real estate requires knowledge and patience. It is not highly liquid. You cannot sell a house in 5 seconds like a stock. But in the long term, it remains a strong defensive fortress for wealth. The system slowly destroys your purchasing power. Fiat currency loses value over time. Money in the bank is not real wealth. It is only a promise. If you do nothing, you slowly become poorer. Strong assets are necessary to protect real wealth. Gold, Bitcoin, land, and value stocks help protect against inflation. Do not just save money, make your wealth survive to the dollar will continue changing in the future. The real question is, will your wealth sink with it or rise above it? Take control of your assets today. Choose real value over paper promises.
If you found value in this video and want to build real wealth, make sure you subscribe.